Back markets a bit tense this morning over trade negotiations from the U.S. and Canada set to resume talks today in hopes of reaching an agreement on a NAFTA rewrite. The struggle to find a compromise on a trilateral trade deal comes as China is promising retaliation should the president escalate the tariff battle and impose additional tariffs on $267 billion worth of Chinese goods. Joining us now to weigh in on the backdrop for investing is Nancy Lazare. She is Cornerstone Macro co-founder and chief economist. It's great to see you again, Nancy. Thanks so much for joining us. Well, we've had a lot of things happen since the last time you joined us. Last time you joined us, you were quite bullish about the backdrop. You've been right. We just saw 2 quarters of 4% plus growth. Where do you stand right now in terms of the backdrop for investing?
I still think you're going to have a lot of momentum, positive economic growth going into 2019. You have yet to feel the full effects of the corporate tax cuts, and the investment side of the economy is likely to continue to be the driver of growth, supporting manufacturing, jobs, and in turn also consumer spending.
And one of the things that you have been real impressed with is capital spending. Tell us why.
Absolutely. So there's been a lack of investment in this country for almost 20 years. That really destroys productivity, that destroys profit margins, destroys jobs. And so the fact that companies are now reinvesting in this country, you've just started to see the positive effects of that.
Now, in the middle of this, obviously, as Maria mentioned, are the trade tensions that we've all been covering for so long. And I guess the thing that I keep coming back to is timetable on that. There seems to be an assumption on Wall Street, and may be proven right, that everything kind of gets worked out. But how much of a timetable should we allow for everything to get worked out? What are you looking at?
So, to be sure, what's going on with trade is a big risk to the global backdrop to the extent to which it affects business confidence. But we did see this morning that the Small Business Confidence Index in the month of August, i.e. timely, did hit a record high. And so at the end of the day, so far anyway, I think what's affecting Wall Street is not yet really hitting Main Street, and that is a positive. That said, it is a risk. You've seen China actively devalue their currency, which has caused the dollar to go up faster than it otherwise would.
That's a problem. Yeah.
And it's affecting companies, and it's affecting potential manufacturing activity. So, yeah.
So you're watching it, but you're still recognizing that this is a negotiation.
Absolutely. Yeah. I'm encouraged with what's going on with Mexico, now maybe hopefully Canada, and also the EU. China, as my colleague Andy LePerriere highlights, is going to be the biggest hurdle to deal with. China, again, is reacting to that. So that probably could have a long runway. But at the end of the day, I wouldn't expect it to massively disrupt the backdrop for the overall U.S. economy.
Good.
Nancy, how about interest rates? One of the things that concern me, we're running a $1 trillion budget deficit. There's talk of some more spending. And then you think about refinancing all of the short-term debt that the government's had at lower rates and potentially higher rates. What impact could interest rates have on cooling some of this otherwise really explosive growth?
No question, the backup in rates is incrementally having a cooling effect on the economy. Quite frankly, I don't want the economy to grow too quickly and overheat, so I don't mind that incremental moderation. But given this economic backdrop, as Maria highlighted, with 4% GDP growth, for 10-year Treasury yields, still to be where they are is pretty below, 3% is pretty impressive. That rates are as low as they are and not that big of a headwind. And then I ask, does the Fed really want to kill this economy? And at the end of the day, the inflation rate backdrop is not egregious enough for the Fed to be doing that. So absolutely, they should be grinding higher. The economy is healthier. If you want to be a weak link and need very, very low interest rates, that's not good either. So I would expect bond yields to grind higher, but not to pop.
What do you make of this narrative that we keep hearing from skeptics saying, yeah, we may see 3% growth this year, but come 19 into 20, we're going to see growth drop. I don't understand how you get there. In fact, I asked Larry Kudlow this the other day, and he said, I just don't see it. But a lot of people keep saying that we're going to drop the growth levels come 1920. Your thoughts?
So, as we talked about earlier, the investment cycle is just starting to ramp up. And so I think going into 19, investment will continue to be that driver, actually probably accelerate into 2019. Other parts of the economy might cool a little bit. Maybe consumer spending moderates a little bit, but not enough really to make any difference. Let's not talk about tenths or two. The underlying trend in the economy is probably someplace between 2.5 to 3. We think we're going to agree with you, maybe 3, stronger than 3 this year, something around that 2019 as you continue this capital spending cycle. Housing also could start to get a little bit of a bid. Rates are up. That's cooled housing to some extent, but you're seeing lower new house prices, which is potentially going to be a tailwind, along with a healthier backdrop for the consumer and pent-up demand for housing.
You're certainly seeing it in earnings, Lindsay.
Yeah, absolutely. Earnings have been outstanding. The last 2 quarters, you're actually starting to see them expected to cool a little bit in the second half. It's still double digits, high teens, and we know every quarter they come in better than expectations. The consumer has been very strong, though. And you talked about the wage increase that we saw in the latest month. 2.9%, it's pretty hot compared to what we've seen, but nowhere near where it has been in this stage of the economic cycle.
Yeah.
Now, you saw bond yields, though, react to that. You kind of discussed that a little bit. Where do you see the Fed taking interest rates from here? Like you said, I know you don't think they're going to try to cool down the economy, but there are, maybe concerns of inflation rising.
Well, we are in the later stages of the business cycle. Notice I said later, not late. Later stages of the business cycle. And at the end of the day, you are getting some incremental wage pressures. But the acceleration we've seen in wage inflation, this expansion, has been very muted, as everybody knows, compared to previous cycles. Classically, given where the unemployment rate is today, average hourly earnings should be 3.5%, not 2.9%. So there are some real positive things going on in the economy. You're pulling people back into. My point is, 2.9 is not high.
Right.
It's higher than we've been, but it's not high. As you said, earnings are strong, corporate revenues are stronger. Companies can afford to increase wages, and they're doing it in such a more moderate fashion that they are protecting their profit margins, which increases the odds that this thing has a long tail.
And we're getting more fiscal stimulus. The tax reform 2.0 is out there. House Republicans unveiling plans for phase 2 of the tax bill to further cut taxes. The package is coming less than 2 months before the midterm elections in November. Nancy, what about that? Are you telling your clients right now to continue buying stocks, being in this market ahead of what could be another tax cut plan?
Well, to be sure, what's going on with I would argue corporate tax reform is a lot more important than the individual tax cuts for the consumer. Hopefully we can extend these tax cuts beyond when they expire later in the decade. But at the end of the day, to me, they're not the crucial backbone. I don't mean to throw water on it. What's really crucial is the success of the corporate tax reform.
And you see a long runway for that.
And I see a long runway.
So you're still telling people to be in this market?
The underlying trend in the U.S. economy is positive, and as our strategy team has highlighted, the dollar is creating some volatility in the market. But at the end of the day, if the economy grows, the market continues to go.
Nancy, it's great to have you on the show.
Thanks very much for your time.
Thank you so much. Nancy Lazar, Cornerstone Macro there.